Hey everybody, Chuck Barone here. Friday, August the 26th, 2022. A very eventful day, one we've been anticipating all week. Lots of information to go over with you guys today to wrap up this crazy week. Another crazy week, another crazy day. This market making an old man get older even faster. Jesus, it's nuts. Before I start the show though, I just want to say thanks again to everybody for their support for the channel, for watching the videos, commenting, and all of the things you guys do every day. So much appreciation to all of you guys for your support to make this channel go right out of the gate. I can't tell you how much we really appreciate it. I'm going to thank you guys for that every day. And I want you to know it's not just paying lip service, guys. I really appreciate it. Also, a special shout out to one of our viewers, Patrick, I'll leave his last name out, who gifted us $25, sent $25 to my PayPal account. A nice thing to wake up to, a pleasant surprise. And I've been loath to ask for anybody's support for the channel. So it's nice to know that there's viewers out there who appreciate the work we're doing and are willing to, support us with a little bit of a monetary gift. Patrick, you're the man, buddy. We really appreciate it. In the markets today, crazy day. Wow. Stocks, Crater City, boom, kaboom. Look at this chart. Don't let me show it. But the Dow Jones Industrial dropping more than 1,000 points today. Stocks getting smashed across the border. Every index down. NASDAQ really taking a beating. I think that St. Jerome's comments up in Jackson Hole really spooked this market. I think reality is setting in now that this inflation thing is going to be a bit of a pain for business. It's going to be painful for the economy, and especially for us, the guys who are going to pay all the bills, and the market reacting as expected. In the bond market today, St. Jerome of Jekyll Island, and I call him St. Jerome because the guy works miracles in the bond market every single day. The market reacts to higher rates and freaks out, goes down 1,000 points. The bond market rallies. The 10-year down to 303 from 310 or 311 yesterday. These are big moves in the bond market. It's not designed to move that way. The 2-year sitting at 338, so now you got a 35 basis point difference. The inversion there, it was starting to narrow, getting down in the 20s. Now it looks like it's starting to widen again. This bond market's just not real. Is that right? Not real? Anyway, the dollar, super strong as always. Just, rate increases are powerful for the dollar, especially when all the other world economies are lagging in their increases, making the dollar stronger against their currencies. Super strong on the index, 108.82. Just crushing all the other world currencies. And again, when I say the dollar is strong, I only mean against other world currencies. It's certainly not super strong in the supermarket these days. Every time I go to the market, I'm just shocked by what I got to deal with. And hopefully, at the end of all this, we'll get a little bit of a return to almost what's considered normal, right? Metals market under pressure today. Gold and silver both down. Gold, last I looked, $1,738 per ounce, down over $20. Silver breaking support at $19. It had been consolidating and moving up. Bounced off that 19. Now with this strong dollar, it just broke support today. $18.93 per ounce. I think that, that buying opportunity I was talking about for you silver fans out there looks like it's going to materialize. So keep your powder dry, because if you're a silver buyer, you're going to have your opportunity soon. Oil market today up small, $92.61 on the West Texas Intermediate. Natural gas basically flat today, $9.30 for their 1,000 BTUs. I think natural gas is kind of just resting here. We'll see what happens with Europe and the natural gas situation there. I've been kind of going back and forth on what Russia's really going to do. Are they going to punish the enemy and cut it off? Do they want to keep the possibility of reviving trade someday alive? Then they don't cut it off. I've been going back and forth, but if Russia does decide to cut it off, you're going to see a giant bounce in natural gas. Bitcoin today getting hammered, down almost $1,000. Last I looked, 20,685. Tough day for Bitcoin. I think as the dollar and the dollar goes, and it seems to be following the stock market these days too. Bitcoin looking for support again. It looked like they were consolidating support above 21,000. Now it looks like it might go back down and test that 18,500. In market news you guys need to know today, there's all kind of stuff happening today, guys. The big news I saw is the consumer sentiment numbers. Consumer sentiment basically collapsing here in the United States, sitting at all-time lows. People in the country are feeling pretty gloomy about their own prospects, about the prospects for the economy, the prospects for inflation. This is very, very bad for the economy and very, very bad for these inflation numbers. The way people feel about things kind of makes their behavior change a little bit. When people think things are bad, they tend to hunker down and not spend money. Not great for the economy. They tend to save a little bit more, trying to prepare for the worst. Again, not good for the economy. Let me give you some of the numbers here. These numbers here, shockingly, consumer sentiment is actually lower today than it was during the stagflation era of the 70s, where inflation was crazy and interest rates ended up going up almost to 20% overnight rates, 15% mortgages, and consumer sentiment today is even lower than the big kablooey, the big collapse in 2008. So people are feeling worse about the economy now than they were during the two most recent crises in the economy over the past 50 years. That was really surprising to me because 2008 was really bad. We all remember that. The 70s, if you were around for that, I'm old enough to remember it. Those were some really, really, really bad times. And to see consumer sentiment today lower than it was then took me a bit by surprise. Consumers expect the economy to continue to get worse. They expect inflation to stay elevated. Only 17% of the people polled, now they're polling 3,000 people per week on these polls, only 17% said they feel like business conditions in the United States are good, while about 25% of those polled said conditions were bad. The surprising thing I saw was 12.5% of the people polled said jobs were hard to find. That kind of flies in the face of these unemployment numbers we've been seeing and record employment and the businesses looking to hire, that more than 12% feel like jobs are tough to find right now. Only 14% of people polled expect conditions to improve over the next 6 months, while almost 30% expect conditions to worsen over the 6 months. Again, consumer sentiment, when it's this bad, changes behavior. People tend to think and behave a little bit differently when they feel like the economy isn't going bad and inflation's going to be high. It does not typically lead to good things and good outcomes in the economy. The Federal Reserve, of course, is monitoring inflation, and their preferred method, the Personal Consumption Expenditure Index, the PCE, showed inflation rising 6.3% in July. I believe the Fed likes this one because it's typically a couple points lower than the CPI numbers are. Inflation is still here. I think seeing these numbers today was a big reason that the Fed came out and Powell was so hawkish at these Jackson Hole meetings. I think that we're going to be living with this inflation for a little bit while, and the consequences it brings, higher interest rate and a slowing economy. A shocking thing I saw today in the United Kingdom, they have kind of caps on where people where power companies can charge, kind of like we're supposed to, where we have these supposedly regulated monopolies in utilities. Well, now they're going to be lifting this cap, and I was reading on a CNBC article that UK energy bills will be rising by about 80% come October when they lift these caps. Can you imagine your power bill going up 80% in one shot? Boom. Okay, you're paying $200. Now the next month you're paying almost $400. I mean, it's just bananas. Prices in energy in the Eurozone are really going up. I think that the recession / depression, whatever we're going to end up with here in the United States, as bad as it's going to be, our friends in Europe better really be hunkering down, because it looks like as bad as it's going to be here, it's going to be significantly worse over there. The Jackson Hole knuckleheads were out today. St. Jerome working his miracles, pulling the strings, basically saying that to bring these inflation numbers down, it's going to cause some pain for the economy and for consumers. So they don't typically come out and blatantly say things. They kind of always speak in this weird double talk, Fed speak stuff they do. But the translation is, inflation's bad, inflation's becoming entrenched. The Federal Reserve is going to have to take some pretty serious action on interest rates to get this inflation down. Expect interest rates to continue to rise through this year into next year until they can get these inflation numbers beat back down to their 2% target. It spooked the market, as we all saw by these market numbers. I think the reality is starting to settle in now to these professional knuckleheads who don't know jack about reality, and like we deal with every day. It is what it is, guys. We've been talking about this on this show for as long as we've been having the show. Been telling you guys what to expect, and the advice we've been giving you guys is still super, super effective for these times, and we'll have you at the end of it, because this will end ultimately someday, ready to be in a position to take advantage of the opportunities that'll present themselves after we come out of this long, dark tunnel we're in. An interesting thing about this inflation, though, I was reading an article that said that corporations in the United States are enjoying their highest profit margins right now since 1950. So they're enjoying their highest profit margins on their businesses in more than 70 years. Okay? Good times and bad times over those 70 years, corporations have never enjoyed the profit margins they enjoy today. It makes me ask myself, how much of this inflation is really organic, driven by supply chains and too much government money sloshing around the economy? And what percentage of it is our greedy friends, our corporate overlords, seeing an opportunity to raise prices, having cover to raise prices, and doing so in a way that's not just a regular price increases, literally gouging the crap out of all of us under the guise of let's blame it on supply chains, let's blame it on Biden, let's blame it on Congress, let's blame it on the Fed or whatever, and these corporations bilking us record profits. Now, a question I've seen quite a bit in the comments, and a question I've been getting asked quite a bit at Ask Chuck Barone, is to explain how rate hikes and raising rates on interest rates affects inflation and brings inflation down. And the simple answer, guys, is it doesn't. Interest rates don't directly affect inflation. What happens is interest rates rising, especially when they rise to the levels they did in the late 70s and 80s, become brakes on the economy. And right now the Fed is kind of tapping those brakes a little bit harder than people were expecting. That's why the market's reacting the way it did today. But what happens is the higher inflation or the higher interest rates lead to A, mild recession, B, garden variety recession, or C, pretty painful steep recession like the last time we saw with inflation rates this high. So the interest rate affects the economy and economic behavior, and that then in turn affects inflation, right? So if demand dries up like it is in real estate, for example, right now, prices come down to generate more demand. And that's what higher interest rates do throughout the entire economy, and that ultimately then is how we bring these inflation numbers down. So don't expect this to happen overnight. Don't expect the Fed to wave a magic wand and say, okay, we've hit this target number on interest rates, so now inflation is going to fall dramatically. It just isn't. It seems to me like when you add in the actual organic inflation with our greedy corporate friends gouging us, raising prices like crazy under cover of this inflation, we'll see. I don't think prices are going to, inflation numbers are going to come down dramatically very quickly. So we'll see ultimately how all of this stuff works out. Anyway, that's it for the day, guys. I really appreciate your support. It's Friday. Let's all have a good weekend. Try to get your mind off the economy. Try to get your mind off the Federal Reserve and all the doings that we all have to worry about Monday through Friday. Take the weekend. Enjoy the time with your friends, your family. You spend some time with your kids or significant other, whatever it is. Take some time to rest and refresh yourself, because back on Monday, we're going to have a whole new batch of stuff to deal with and a whole new batch of data. These are, the Chinese have an old proverb. They say, may you live in interesting times. We certainly are right now. Have a great weekend, everybody. Again, as always, if you like what you're hearing, hit the like button. If you haven't already subscribed, double check your subscription too, because it looks like YouTube's purging my subscriptions. I've been losing, 10 or 15 subscribers every single day. Double check your subscribe. Make sure to click the bell, ring the bell for your notifications. Everybody have a super awesome, great weekend. Go Bills. We're playing the Panthers today. We're going to whoop them. And we'll see everybody. Now, P.S. One last thing. We do have a video coming out tomorrow. Jordan and I did a quick video yesterday talking about real estate. That'll be coming out tomorrow, so look for that. As always, ask your questions in the comments. And if it's something a little more in-depth, ask Chuck Barone at gmail.com. Until Monday, guys, have a great weekend. Take care. Thanks.